Welcome to Sara's Opening Bell. If you're tuning in right now, you're likely a current or interested participant in the stock market game, and we're happy to have you. You're joining a growing community of individuals of all ages committed to learning how to manage and invest their money through our simulated trading portfolio. Your stock market game experience will be filled with opportunities to learn and apply your newfound investment knowledge. Because what exactly are the capital markets? Capital markets are financial markets that bring buyers and sellers together to trade stocks, bonds, and other financial assets. All stock market game portfolios begin with a starting cash balance of a virtual $100,000. But depending on your location, you may have noticed that your overall buying power, which is the total amount of money you currently have available to purchase stocks, bonds, or mutual funds, is $150,000. So where did it come from? The additional $50,000 that you may have available in your portfolio is a loan, and it allows you to conduct transactions referred to as buying on margin. If you've ever looked at your stock market game portfolio and wondered, hey, I'm trying to sell shares of a stock I know exists, but it's not recognizing the ticker symbol. Or I purchased shares of a stock recently or in the past, but when I checked again, it's now priced dramatically higher or lower per share. Or maybe a company that you're sure was available on the exchanges you can't seem to find anymore. If you've experienced any of these things, you've also likely experienced a corporate action. So let's dive in. Corporate actions are significant events that are initiated by companies that can impact their stock and ultimately affect your investment portfolio. To help you make the most of your investment decisions, I'll help explain what it means to short sell. Instead of buying a stock for a lower price and hoping to sell it later for a higher price, with short selling, investors sell a stock today at a higher price in the hopes of buying it later at a lower price. Today, we're going to talk about something that can make or break your investing journey, and that's having a solid investment strategy. According to Investopedia, the term investment strategy refers to a set of principles designed to help an individual investor achieve their financial and investment goals. Now, you might be asking yourself, why do I need a strategy? Can't I just pick a few stocks and hope for the best? Well, you can, but going in without a plan is like trying to navigate a new city without GPS. We're quickly approaching the final days of 2024's presidential election, so it's only right that we discuss how presidential elections can impact the US stock markets. Historical data suggests that economic and inflation trends, more so than election outcomes, tend to have a stronger, more consistent relationship with market returns than major elections. Market moves are more likely to be driven by corporate earnings, interest rates, and other economic factors. So, can an election year impact investment outcomes? Perhaps. Decisions made by the new president can influence everything from job growth to how much businesses earn, which in turn affects stock prices. But financial experts say you shouldn't focus too much on the election when investing. While political news can cause small changes in the market, in the long run, the success of stocks and other securities is more about the economy than politics. So it's time to engage your stock market game portfolio and evaluate your current holdings because markets are now open.